Hi guys, welcome to the Stellar session. So, if you're new to this, these are the key areas that I'll focus on, and they are basically based on two key concepts: the Wyckoff Method and the Playground Zones methodology. Before getting into the details, as usual, disclaimer: this is for education and research purpose only, not financial advice. So let's take a look at Stellar. Stellar, similar to Hedera and Sweetcoin I just talked about 10 minutes ago. Coincidentally, they are all trading below the short-term playground zone. So if you have been in the other two sessions, you probably have noticed this as well. Basically, they are all trying to stay above a very weak support level. I covered this in previous sessions, so I'm not going to talk for very long about this. So basically, these candles without overlap, they don't provide very strong support. For Stellar, it's been there longer than Sweetcoin, so we've got an early cycle to take reference, but we'll get to that at the weekly cycle when we look at the Wyckoff stages. In terms of this short-term playground zone, if I draw two lines over here, so basically we are in a downward channel. This downward channel, if you are interested in studying candlesticks patterns, basically we had a flag earlier. This was the earlier flag, and then it broke through upwards, and then now we're having another steeper flag right now. So basically it can break above this resistance line, but then it may probably short-lived. So basically the bottom of this pink box is a resistance line now. Previously, for the past almost 2 months, the Stellar coin was trading above this or within this level, this range, this trading range. Right now, if it doesn't, like these two candles, actually you can count it as 3 as well. This one, there's a bigger gap, but basically people has been trying to push it back to within the playground zone, but it hasn't been able to maintain that price level or regain that price level. So what we are seeing now, especially when looking at the volume as well, that could be something that's not going to sustain. If we look at the weekly chart, so when we compare to what we had last time, in order to be easier for you to see, I'll change this to a line chart. Last time we had all the buying climax up first after distribution, and then shoops, almost a straight line drop before finding a sign of weakness level, and then we've got 2 more bounce before returning to an accumulation cycle. This time we had our preliminary supply in mid-November, and then we had our buying climax late November last year. We see the volume bar as well, and now we had very small second test, and after the automatic reaction. So this sign of weakness is not set in stone yet, because if we look at the candlesticks, it's still being developed, so it's still finding a low. So last time when we had this, it went back to the long-term playground zone before it find a support to and enough demand to push it back to a level close to the automatic reaction. So this is the level I am talking about. Let me change the color as well so it's easier for everybody to see. So basically this turned into a resistance line last time. So taking this to what we have right now, this purple line, I'll drop this green line. So this purple line right here currently is more like a support at this moment, but if the price further drops, so it doesn't have to drop all the way into the long-term playground zone, it can hover around. This can be a trading range, a pretty narrow one, somewhere between 27 cents to 34 cents roughly. So it can happen that way, or it can happen similar to last time, return to the zone, find a support level, and then bounce. If it really this purple line from the automatic reaction really becomes the resistance line for the bounce this time, then this roughly 34 cents is a level where we'll see the price coming back down if it when that happens. Right now it's still hovering around this level, so it doesn't have to fall. So if it successfully defend this level, it can trade sideways, and maybe if they're really good news, there could be an upthrust as well. So remember what we've seen here, right? So last time it did not drop that low before getting back to an upthrust and then an upthrust after distribution, but it can happen this way as well. So it can drop lower than an automatic reaction, find this is sometimes referred to a phase B, a sign of weakness, and then seek another high or just another second test around the buying climax level. So these are the ways that the price can develop. But the like in the beginning I mentioned, overall these altcoins are exhibiting a very similar behavior. They're trading right below the short-term playground zone. So it's not optimistic, obviously, depending on whether you are a flexible trader or a very or straight bullish trader. If you trade both ways, then you can find ways to gain from your trades anyway. But if you are waiting for a bounce, then this level, if the price really bounce back, then there may be a short-term opportunity. Otherwise, I would wait, because it looks to me, with all the geopolitical and trade affairs going on, I don't know how to describe that. It hasn't evolved into trade war yet, but obviously it's been covering everywhere. So when there's such uncertainty, it's not a good sign for most of the things, including what we're seeing here. So that's for Stellar. I'll move into Avalanche